All right, welcome back to another video. Today I'm going to be going over sponsorship. What is sponsorship? How can we use sponsorship in our trading in order to tell our discretion and in order to know which moves, which legs, and which fair value gaps are valid versus invalid. So starting off, what sponsorship is when a higher time frame PDRA sponsors a move in order for us to take a continuation trade out of it. So what that means, a higher time frame PDRA would either be anywhere from 15, 30, 1 hour, 4 hour, daily, or week new week opening gap, a fair value gap, a rejection block, a new week opening gap, any sort of PDA rate that's higher time frame can cause these sponsorships. And pretty much what it means is that any move, any leg that comes out of these higher time frame gaps is automatically sponsored, and you can look for a continuation out of it. And any leg that does not come out of these higher time frame sponsorships is not valid, and that means that those fair value gaps are less likely to hold and proceed to your higher time frame draws on liquidity. So I'm just going to draw something out real quick. This blue line is going to be our higher time frame draw. So high time frame draw, and by high time frame draw, I pretty much mean any session high or low, any like big unfilled gap, or just the draw on the day that we're trying to trend towards. So whether that's a new week opening gap, new day opening gap, 4 hour unfilled, any session high or low, or just a really prominent high, that is our high time frame draw on the day. So let's look at this example right here. This price right here is just chopping around, and then we proceed to go into a 4-hour FEG. And what did I say? Any leg that comes out of this FEG is automatically sponsored. So that would mean, I'm just going to draw it out with the Fibonacci, because why not? Now, that's retarded. I guess the ruler is to mark it out from here to here. This leg is sponsored. Come on now. From here to here, this leg is sponsored, meaning any fair value gap, 5-minute or higher, that forms in this leg, we can look for a continuation out of. And as you can see, we form a 5-minute gap. So once we bounce back into here, and then once we get our inversion, we're good to enter our trade here, whatever, break even here or somewhere else, and target our high time frame draw. Where this 5-minute becomes unsponsored is once we come up again, and once we create a leg out of this 5-minute, my bad. So as I was saying, any move that comes out of this next 5-minute fair value gap is no longer sponsored, because this 5-minute fair value gap in it of itself is not a higher time frame fair value gap, meaning it cannot sponsor moves higher. So once we come up here and make this new leg, and this new leg produces its own 5-minute fair value gap, this 5-minute fair value gap is no longer sponsored, and it's less likely to hold. So you can see a move come back into this 5-minute sponsored, or come back here and create a new leg before proceeding higher. So this would be a lower probability trade that we're going to end up seeing, because it's no longer sponsored. However, what can make this 5-minute fair value gap sponsored is if this 5-minute fair value gap was actually a 15. Because now, if this is a 15-minute fair value gap, this is a higher time frame fair value gap, and now this means this new leg is now sponsored. So any fair value gap that forms in this leg is now sponsored going higher, meaning if we get a retrace, into this 5-minute fair value gap, now we could look for entries and target our high time frame draw. So once again, only 15 through 4-hour or daily or weekly gaps can or PD arrays can sponsor these moves. And it doesn't sponsor just the fair value gap, it sponsors the leg. So any leg that is made in the fair value gap, we get a retrace to and proceed higher. And why does the high time frame draw matter? Because, so let's say this is sponsored, and now because this 15-minute fair value gap is a sponsored and it's its higher time frame gap, that means this 5-minute fair value gap is now sponsored. But what makes these gaps unsponsored is once this whole move ends up hitting our high time frame draw. Now that the objective is met, these fair value gaps are no longer sponsored, because the move has already been made, and a retrace into these gaps and for it to proceed higher is highly unlikely. So these are now unsponsored, and you should not use them for a continuation trade, because your higher time frame draw is now checked out. The next part of the sponsorship is showing you once again that after we tap this higher time frame gap, whether it be a 15, 30, 1 hour, 4-hour daily, the whole leg is sponsored, meaning it doesn't matter if we have 1, 2, 3, 4, 5-minute fair value gaps, every single one of them is sponsored as long as it's in that leg. So you can see a retrace from here. It doesn't really matter You don't have to wait for the second one to get hit. You can just wait for the first one to get hit and to go up because they're both sponsors. So you can see this and this. It doesn't really matter. Or it could come down into the second one and go up. Either way, the move is still sponsored because both of these gaps are sponsored due to the fact that this whole leg is sponsored from this 4-hour. And then again, if this 15-minute was a 5-minute gap, that is sponsored because it is sponsored by this leg. It creates its own leg, which is now unsponsored, and it creates this 5-minute fair value gap, which is highly unlikely to hold because it is unsponsored, because it is coming from a 5-minute gap that cannot sponsor its own move. It needs to get sponsored by a 4-hour or a higher time frame PD array. I hope this made sense, and hopefully you can use this to your discretion moving forward.